Alrighty boys, welcome to another video. Today we're going to be talking about FFVGs and IFFVG theory, talking about how I use them, what they mean, what they are. There's been a lot of confusion around them even though I've made a million fucking videos. So today we're going to be talking about it, detailing everything that they are, how they work, why we use them, what they represent. First and foremost, we have to understand how my model works, okay? We're essentially trying to capitalize on market state transitions to and from fair value, okay? One example being you're in fair value for too long and that's not an adequate representation of equilibrium. There's a shift in market structure as a result of the total float changing, et cetera, okay? A good example of this would be, honestly, the trade I took today during the AM session, or I guess PM session. A breakout on fair value, consolidation for like fucking 2 days, some range in fair value, a breakout on fair value using a pointer in FFVG. But why does the market do anything? Efficiency, right? The market is trying to seek some amount of efficiency on some time frame, whether or not you realize it or not. That's the whole goal of the market, to allow for proper, effective, efficient transactions between a buyer and a seller. The market, contrary to popular belief, is not stable when it's at all-time highs. It's not stable when it's fucking crashing. It's stable in months like September. It's stable in kind of like, even though it's not, it's stable in terms of price action on a day-to-day standpoint when it's consolidating. You know, we shit on price action when it's consolidating because we can't make as much money, but ultimately that's what price wants to do. It wants to be comfortable on some type of time frame. That's the idea. And so really all the FFVG does, or the IFFVG, essentially represents the willingness of buyers and sellers at some range in price action to not be able to control or to be able to control an area. You have to understand the market's not concealing anything. The market's not hiding anything. It's not trying to wait and induce you. It's not trying to manipulate you. These are common ICT misconceptions, TJR level misconceptions that have penetrated every fucking inch, okay, of like the trading space, and it's just annoying. There's so many little nuances that are like this where I'm talking to a brother and he's like, oh, the market makers are gonna manipulate. I'm gonna fucking sexually assault you on some real shit. Like, what are we fucking talking about? They don't give a fuck about you, little bro. They do not give a flying dick tip about you. I'm sorry, they don't. But what am I fucking talking about? Oh yeah, efficiency and inefficiency, okay? The goal of the market is an aggregate of buyers, an aggregate of sellers. If they're inefficient, to rebalance them. If they're efficient for too long and you start to get kind of some excess, you get a breakout on that excess towards some type of draw on liquidity. That's like literally the only thing that the market's doing or will do. There's no other reason for anything, okay? So you can kind of think about the FFVG or the first fair value gap or the IFFVG or the inverse first fair value gap as a representation of the willingness of the buyers or the willingness of the sellers to maintain a area in price action. That's all that it is. You guys might have heard of order blocks before. An order block is a very simple concept. It's simply, let's say you have some amount of structural high, structural low, bear with me, okay? An order block is simply a sweep on that low, a break in structure to the upside, and then some type of inefficiency that gets created in this range. The order block is represented from the candle low to the candle high of the range that did this thing. Now, the order block itself means fucking nothing. The order block itself is like a set of reactions. It doesn't mean anything. It's literally just liquidity sweep, break in structure, inefficiency. You can't trade this. If your model is this, you're fucking stupid. Like, this is not a model. This is just how the market works if there's orders at a low. You fill orders at a low, you move impulse from that level of orders because there were a lot of orders and you could leave behind an inefficiency. This is not always the case. This is why you see continuations. So this is the order block. The FFVG are these guys in here, right? We're going to care more about what happens on the inside of the order block and where the order block came from more than we're going to care about anything else, okay? The FFVGs essentially represent the core inefficiencies, the base inefficiencies of a leg, as basically as far deep as you can get on an order block before the structure breaks. They're going to hold like shit you've never seen in your entire life. Nothing else comes close to it, okay? Regular fair value gaps are a structural thing, okay? A good example to show you their ineffectivity is to show you this big fucking drop that we had on Thursday. Like, all of these are regular FVGs, right? You can see all these regular fair value gaps in here. The only ones that really matter are consequential FVGs or first fair value gaps. The fair value gaps located towards the nearest draw on liquidity. These are going to be your base inefficiencies that hold together markets. So when you're analyzing for FFVGs, all that I did in the past before I had the indicator, like you see right here, which is actually getting revamped. We're doing an upgrade in the indicator to increase the accuracy from what it is right now, but also to allow for separation. Because right now, it'll actually allow you to aggregate all the FFVGs so that it doesn't take up too much space. But we're gonna have an option where when you're in a live market, you can click separate, and you'll have each individual FFVG, and it won't combine them. It'll combine them to save space because ultimately there's no reason to get like pinpoint accurate with FFVGs. The idea is to represent like kind of like a more accurate order block, and they're way more effective. So if you're thinking about FFVGs, all you have to do to identify them is find some type of, we use the 5-minute time frame as our resting time frame for all of our sweep identifications. That's how the indicator was trained. Okay, you find some type of 5-minute draw on liquidity. You can see high res liquidity. You zoom in on that draw on liquidity, and you find all the first inefficiencies that formed on the time frames between the 1 minute and the 5 minute. We use the 1 minute and the 5 minute. That doesn't mean there's not a 6 minute. Doesn't mean there isn't a 30-second. I just don't use them. They're just not going to work, okay, as effectively as the ones that we have. The 1 through the 5 will cover every single, I mean this, every single move in the market can be explained by an FFVG or an IFFVG between NQ and ES between the 1 minute and the 5 minute time frame. That's a very powerful statement. Not a lot of statements are like that. That's the difference between my model and your fucking bullshit ass model. Okay, my shit's good because I made it. Good old little old me. Okay, I ripped some bag one night. I saw, oh shit, this 5 minute fair value gap's kind of going crazy, and I was like, huh, that's strange. We had this order block, right? And then we had this little fucking 5 minute fair value. I'm like, oh, that's weird. It was like a fucking tick. I'm like, whoa, that's crazy. What's unique about this? That was the first one. Okay, well, at the 4 minute time frame, that was like right here. And then 3 minute right here. And 2 minute right here. And then all of a sudden, I started drawing them in manually, and these bitches were fucking controlling everything. I'm like, that's crazy. That's crazy. So yeah, so that's what a fucking FFVG is, like in simplicity. Now, you have to understand, they are essentially going to hold a leg together. They develop from a leg, essentially not being able to retrace out some range of price action. Why are they created? Why is price moving anywhere? Okay, well, obviously efficiency, but the only reason it's going to have some type of like this impulse leg is going to even form is because you create a problem, right? You create a problem on some lower time frame. You can imagine this is like a 1 minute time frame. Okay, you can imagine this is like a 1 minute time frame, and here's price, here's price, here's price, here's price, here's price. Influx of orders, you create a problem, right? Well, that looks like a fucking sperm. Holy shit. All right. Do I pack it up, honestly? Jesus. Okay. So what is price going to do if it creates this inefficiency? Well, it's going to go to the nearest amount of liquidity to fill the inefficiency, right? Has no other goal. So it's going to go move towards that pocket of liquidity to fill this inefficiency. But what if there's nothing there? Well, then it's got to go even further to get that, right? And so it leaves behind an even bigger inefficiency. And if there's still nothing there, it'll leave behind an even bigger inefficiency. And you can kind of see how the inefficiencies travel up the time frames, and that's how you get these big legs to develop, right? So I'll do a little case study for you, for example here, right? Because the argument is how can you ever have a big move? How can you ever have an impulse move if you never started to be inefficient on a low time frame? How can you ever have a big 15-minute move or a big hourly move if you didn't have the first fair value gaps that were presented on a draw to generate that move, okay? And that's the whole point, right? Take a look at this leg here. How can you have this 5-minute fair value gap if you didn't have like a 4 minute in here off that sweep, right? That was even right here. And how can you have a 4 minute if you never had a 3 minute, which is right here? And how can you have that if you don't have a 2 minute, which is right here? And how can you have that without a 1 minute, wherever that fucking sweep is, which is right here? You'll notice the effect is generally they should go, they should stack. That's the idea, because as you grow time frames, you should see the fair value gap translate up. That's the main point. It's not going to be perfect every time. It's not going to be 1, 2, 3, 4, 5. Sometimes you'll have a 3 minute and a 2 minute on the same one, but the argument still holds. There's some type of translation of a low time frame inefficiency traveling up the time frames. What this means is a small problem is becoming a much bigger problem. Now, one of the key ideas you have to understand about FFVGs is that we have reacted and unreacted FFVGs. It's a very easy concept to understand. Basically, every FFVG has an equal and fair chance of holding and controlling the narrative in a market. But the unused FFVGs that we have had no price action over are going to typically be the reversal areas in the market or sponsor the reversal areas in the market. You can't set limits on them. like none of that kind of stuff. That's outside. Like I promise you, don't. I've been down that rabbit hole. I did a bunch of bag. Like realistically, that was just a waste of bag. Honestly, I got nowhere with that shit. But the untapped FFVGs or unsponsored FFVGs that have been kind of set and ready to go in the market, typically where you see reversals from. But when price consolidates, it's going to consolidate at, near, or around an FFVG set or FFVG that'll then end up creating its own inefficiency to then develop to the downside. So you can imagine it like this, right? Let's say we have this prior leg that has an FFVG here. Let's say price had already tapped into it. Price will do its thing, come in here. It'll kind of slow down in here. But it's never, you have to understand this, price will never, ever, ever leave this range until it generates an untapped inefficiency. Because, guys, why is the market moving anywhere? It's because it creates a problem that becomes a much bigger problem, becomes a much bigger problem, and much bigger problem. The market's literally running out of effective order flow on one side of the market to fill some type of inefficiency. Okay, so this is where the cookie fucking crumbles. So it's never going to move until you have some type of set of inefficiencies that we don't get reacted to. So these used FFVGs will often become, an area where these new untapped FFVGs can generate off of. But ultimately, they're all fucking meaningful. Like every FFVG is meaningful. You need them all in order to effectively trade. All I'm saying is that the untapped FFVGs are just going to typically be your reversal points, or once you have untapped FFVGs and your pointers and all that good stuff, you're going to see big price developments. Hence why one of my rules with pointers is that when you have low time frame inefficiencies developed on a draw on liquidity, the untapped low time frame inefficiencies of any time frame, even a 1 minute, we go higher. I use a 5-10 split, or I teach a 5-10 split. I use 10 on those types of trades. It's because you have all the fucking ingredients. When you're taking a trade that's just a reactionary trade, which is essentially a pointer off of just an already used FFVG, you're betting on the sponsoring of a new set of inefficiencies that haven't gotten reacted to. You're not getting the confirmation ahead of time. You're betting on it. So it has a low probability, and so your sizing should follow that. But understand that these moves can happen as a result of tapping into already filled FFVGs. So how do you differentiate? We're going to get to IFFVGs in a minute, but how do you differentiate untapped versus tapped? It's this simple, okay? For FFVGs, all that it is you use the local time frame, right? So let's say this is like a 4 minute, right? Let me make this move to the upside. Here's your 4 minute. As long as price doesn't touch after the 4 minute closure, right? As long as price never touches back into that inefficiency, after it locks it in on the local time frame, you have to use the local time frame for these specific untapped FFVGs. As long as it never touches into it on any time frame after the close, doesn't matter. The moment it wicks into it, it's over. Okay, it's over. You want price to maintain the level. You want price to maintain it and not do anything with it. That would be an unfilled or a virgin FFVG, whatever you want to fucking call it. My fucking boys love to call it virgin FFVG, whatever. Okay. But an IFFVG is going to work different. What is an IFFVG? First of all, you can imagine, here's your fucking order block, right? Your order block's in here. Here's your set of FFVGs. Well, what happens when price, fucking inverts the order block, right? Well, if it does it in a way where it maintains the FFVGs, these guys still hold, right? If you know anything about FVGs, you know that fair value gaps can be inverted. The idea is that essentially, like let's say you have an impulse move to the upside, and here's your fair value gap that was moved to the upside. And price comes in and retests it after this third candle, okay? Price comes in and retests this inefficiency on this third candle, and we took so much liquidity at the high that we actually we balanced price to the opposite side, right, to the sell side. And therefore, we're able to kind of fall beneath the structure and be trapped underneath of it. The inefficiency, at least this area in range, has been made efficient because there's been effective price action. But in most cases, you'll get a new inefficiency to form in here of like the opposite type, right? That's the general idea if you absorb too many orders at the high. The same thing is true for FFVGs. They can be inverted on. But the untaps work a little bit different with these, right? So like, let's say this is a 5 minute right here. Well, that wouldn't work like that. It would be a 5 minute up here. Let's say this is like a 1 minute, okay? If price just falls like this and never taps back into any of them, that's all that you need to worry about. But in order to get a clear view, because sometimes if you're on a 5 minute, you'll see like, no wicks, but then you go to a 4 minute and there's like a wick all the way back into here. All that you have to do to identify if an IFFVG has been untapped or tapped is as simple as this. Whatever time frame that it's on, here's your 1 minute, right? You find your 1 minute. If it tapped it on that time frame, on the 1 minute time frame, that's what you use. So here's your 1 minute. If it tapped on the 1 minute, that's what you use. Here's your 3 minute, right? We'll just say it is. As long as it didn't tap on the 3 minute, totally fine. Here's your 5 minutes. As long as it doesn't tap on the 5 minute, totally fine. It's as simple as that, okay? And sometimes you have to check after it's locked in, like even the fucking 1 second time frame, just to see if it's been ticked into, okay? Because these will end up being really hard inflection points in the market. Again, we're going to be adding untapped FFVGs to the indicator in the future. We have a lot of big plans for the indicator. That's why I'm shilling it like a fucking pig, because it is so unreasonably priced. You guys don't understand. These motherfuckers, bro, they wanted me to charge like crazy prices of this shit. I was like, fuck it. All right. But we're raising that bitch. I don't give a fuck. We're raising that bitch. Lock it in. Black Friday sale. Use code BLACK, baby. Use code BLACK, baby. Come on. Michael Flux Charts, thank you for the code. I said, Michael Flux Charts, can we use code BLACK? And he said yes, he didn't care. Michael Flux Charts, have my kids. So, that being said, use code BLACK. Check out link in the bio. You save $10 a month. It's gone this Friday, and it'll be only more expensive. That being said, that's how we invert the IFFVGs. The moment you tap back into them on the time frame that they were formed on is when they get tapped, right? That's how they get mitigated. They still exist, and they can still be inflection points, just not as aggressive reversal areas. That's the main idea, the main objective of the IFFVG. So they can still be used in the future, of course. So I'll just kind of demonstrate. I'll show you a trade that I took today, actually. This is a short I took today. I'll show you an example here. Hold on, we'll go with this. Okay. We'll turn on the indicator. I took this short. I was in obviously the top tick, and then I filled at the pointer. So here's the indicator. You can see you can turn on FFVGs or IFFVGs. I recommend having a double pane open. One tab for NQ and ES for FFVGs, one tab open for NQ and ES for IFFVGs. That way you can separate them. They mean the same thing, just ones that have been inverted on. They're all adequate and important. For today's lesson, we're just going to have the one on. So what it does, it'll kind of just show you, it'll find all the 5 minute draws. Right, it'll find all these 5 minute draws. You can see one, you can see here, and then you can see here. It'll find all the FFVGs associated with those draws and liquidity. That's all that it really does. It's pretty good. And then it'll kind of combine them all together and then show them as one range. So you can see all these different levels in here. Like you can see a 3, 2, 1, and 5 all represent this one range in price action here. That's the whole point of moving them. Eventually there will be a feature somewhere in here where you can click, it'll separate them. That way you can see each individual layer if you wanted to, as well as untaps. That's for the future though. I think once we hit a certain number of users on the indicator, that's when we'll roll that feature out. The accuracy feature and the splitting feature, that's coming like ASAP though. They're working on it right now. So like let's say we're in this trade. What exactly are we doing, right? The pointer is a mechanism as a reaction to an FFVG. If you know anything about the pointer, it's basically a validation, moving away from a base inefficiency being an FFVG or an IFFVG, validating it, moving away from it, meaning that you don't have enough liquidity to fill, so you move away from it, right? That's what a pointer is doing. A pointer is the type of reaction you get off of an FFVG. There's a shit ton of rules. Go watch my fucking videos on pointers. I'm teaching FFVGs today for another day. But again, what do we know? We know that we can't have a move. You can never have a move to the downside without first creating some type of untapped, unused inefficiency. And you can see that is the case right here. When price really delivered is when we locked in these untapped inefficiencies. See how that we have not reacted to these inefficiencies yet? Notice that? So ultimately what we're doing is we're taking a pointer reaction to an FFVG to another pointer reaction to an FFVG. This is the mechanical model. The Macre mechanical model is pointer to FFVG. That's the whole concept. And obviously if price is effectively reacting to FFVGs, right? You got FFVGs here, point. Obviously that's effective, efficient price action, right? You can see this. That's why, like, if you turn on the consolidation, you'll see this big gray box in here. This is the ECR. That's because this is one big consolidation. It's telling you that you have PO3. It says it right here, says it right here, says it right here, says it right here, and all of this range in price action, meaning you're not taking trades in here. Wow, I know, novel concept, right? Novel fucking concept. Oh wait, it's not here? Probably because we're taking trades. Convenient. Anyways, the whole point, right? The whole point is to take a pointer reaction on an FFVG set to another FFVG set. Here's the thing though, okay? What's rule number one of pointers? If you know it, type in the comments below. I'll reply with some cute ass shit, okay? I might give some sloppy dome tech. We'll see. We'll think about it. What's the number one rule? Every single implied move starts and ends with a pointer FFVG. How can you ever have a reversal if you don't tap into that next level? So what I know for certain is going to happen is a pointer FFVG is going to take me at minimum to the next FFVG. Because how can you ever go anywhere else without tapping into that? You just can't. You physically can't. You have to. It's supply and demand. These represent supply and demand based inefficiencies that hold together a leg. Okay? So if we're in this trade, I would have 2 entries here. I had a couple fills in the highs here, and then I had another entry right here on this pointer. Okay? And so what I'm targeting is essentially the pointer validation of another FFVG set, but I'm out before that with squid, obviously. This is external stuff. But the Macre mechanical model is pointer to FFVG. You're probably wondering, well, where the fuck is the FFVG? Well, hey, we forgot IFFVGs, right? Because look, what do we have right here? Buy side sweep, buy side sweep, buy side sweep, buy side sweep. And if you come in here, what you'll notice, turn on IFFVGs, we'll turn on ECR, oh, it's already on. We'll come in here. Oh, look at this. Tapping into IFFVGs. Oh, and then we deliver off these IFFVGs. And all you have to do is find a little pointer entry in there. I believe it's on the 4 minute. Might be tripping. Oh, 3 minute right here. Here's your pointer entry as a validation of these FFVGs down here. And there's your fucking inflection, bro. There's your reversal. And one thing that's really neat about this is the IFFVGs that we're tapping into are untapped IFFVGs. Look, 1 minute IFFVG in here, or this IFFVG, I believe it's a 1 minute. We come into it. There's one also in here as well, but obviously we've mitigated it by dropping into it. Okay, untapped IFFVG. Untapped IFFVG, we have not reacted to it yet on that local time frame. So obviously it's going to do a lot more damage than something like this, which is reacting off of a previous IFFVG. So that's the point I'm trying to make here, right? The whole everything in the market comes down to pointer FFVG. You get big reversals off untapped FFVGs. Regular, already sponsored FFVGs will continue to sponsor moves, and you'll never have price deliver until you have an untapped FFVG in the leg. Why would price move if it doesn't have a problem to solve? There's no reason to. Price doesn't move in any fucking random way. It's not random noise. I promise you, it is incredibly fucking obvious. Another thing you can do, these fucking LARPers love to throw on this volume profile. Volume profile. You can see the orders. You're a fucking lame little. Oh, dude, I dislike you in so many ways. Let me show you this shit, okay? The volume profile is probably the most LARPy ass shit you could ever fucking throw on a screen. Let me just put it on here. Oh, a little volume profile. Oh, look at me. You're fucking lame, okay? But notice something. The big divots in price, okay, these big divots in price all happen around near FFVGs or IFFVGs. And where these big peaks are, you won't see that. You see that? Space, big peaks. Space, big peaks. Because these represent the inefficiency in price action. Oh, novel, right? It's pretty crazy, right? Look at that. You see it again and again and again. That's the whole point here, okay? Peaks, no inefficiency. Valleys, inefficiency. Valleys, inefficiency. Valleys, inefficiency. Valleys. Okay, guys, it's not that hard. It's not that hard. Okay, obviously, agreeable price, ineffective price. Price seeks to fill ineffective price. React to ineffectivity, draw towards ineffectivity, react towards ineffectivity, draw towards ineffectivity. React towards ineffectivity, pointer, draw towards ineffectivity, react to ineffectivity, draw towards ineffectivity. Look at it. Just over and over. Guys, it's super simple. Fucking volume profile, my fucking dick and balls, bro. I'll show you a volume profile. I'll make your whatever, bro. Anyways, FFVGs, IFFVGs, super simple concept. Highly misused, highly misunderstood. You guys like think it's like some fucking magic thing. Yeah, it's fucking great. Oh, it's you. If you think this is cool, just you wait. Just you wait till I gate my fucking shit. Just you wait, bro.